Let's talk to David Paul. He's the Managing Director of VectorVest UK. Very good morning to you, David.
Morning, Mus.
Right, so we've got a number of thought-provoking slides to run through. Let's get the ball rolling. 5 growth shares with proven safety of earnings. Earnings being absolutely key.
That's for sure. They say in the property market it's location, location, location. In the stock market it's earnings, earnings safety, and earnings growth.
Very good.
So what I've done today is that I've tried to pick 5 shares that are growing their earnings strongly, that have a proven track record of making money, a relatively safe pair of hands.
Okay, we'll look forward to seeing those. Let's kick off, though, first with the UK market timing. Now, you've got a short-term and a long-term signal. What is this telling the crowd?
Well, it's saying, I think, reasonably easy to see that the short-term trend is down. Our longest-term measure of the UK market is still up, but it's been difficult going, certainly in the noise over the last week or two. Not uncommon for August, not uncommon. The Turkey and the emerging market thing has caused markets to shake a little bit as US interest rates go up. Emerging markets are normally the first canary in the coal mine.
They sure are.
So
a bit of volatility short-term in the UK market, but so are you basically not allocating any assets until the short-term?
In terms of our worry-free model, which I've spoke about the last time I was on here, it looks at the longest-term measure of the UK market, and so the worry-free would still be fully invested at this point. Okay. I personally am going to wait for the short-term trend to turn back up with the longer-term trend before initiating any new positions.
I understand. Okay, so let's move to the US market timing indicator. What is this telling us?
The US pretty much saying the same thing. The short-term trend is down, longer-term trend is still up, and at VectorVest we have a fundamental model of the US market which is based on earnings, interest rates and inflation, and the founder of VectorVest, Dr. Bartolito, has been keeping this model up to date for the last 30-odd years, and that model still suggests that we are in a bull market. And on the next slide I've got the longer-term position of the US market, and as far as I'm concerned, that's a weekly chart over 3 years, and as long as it is above that trend line, I'm reasonably happy. And as you can see, and as I've pointed out many times on here before, there's a large bullish divergence between the weekly price chart and the MACD indicator, which invariably means that there's more upside. So I don't think anything's going to happen until Labor Day.
Yep.
But after Labor Day, which is 2 weeks today, then I think the probabilities favour another push on the upside.
So you're looking for a leg up.
Yeah.
Okay, well, let's talk about these 5 growth stocks. Let's kick off with Dart.
Well, Dart, growing earnings very strongly indeed. On our programme, we have many measures, many fundamental measures, but our first measure is called relative value, which looks at the price appreciation potential of the share over a window of 3 years into the future in relation to a AAA rated corporate bond. And all of the shares I'm going to talk about today have very high relative values. The chart is making rising bottoms. It's pulled back and kissed the last old top. The safety of the earnings over the last 5 or 6 years is excellent. All the financial ratios are getting better. I think it's done quite a bit in the short term, but over a window of a year into the future, we believe there's a tremendous amount of upside in Dart, and I'm currently holding it myself.
And that's air freight. Okay, so let's move on to the next one, Games Workshop.
Games Workshop has done a lot in the short term. On a window of 3 years into the future, the price appreciation potential, we believe, is excellent. It's got an exceptionally strong record of making money, and it's broken up the page. It's up a bit this morning. I see it's making a series of rising bottoms. Again, it's done an awful lot in the short term, but over a window of a year plus into the future, we believe there's a tremendous amount of upside still in Games Workshop, and it should be held and added to as it breaks up.
Understood. And let's move on to JD Sports.
Well, JD Sports, again, high relative value, price appreciation potential in relation to a AAA rated corporate bond. A very safe track record of making money. It had a very, very strong run for many years, then pulled sideways, and it's now broken out of that consolidation. And we believe that on a window of, again, a year to 18 months into the future, there's considerable upside in JD Sports.
Okay, and the next stock, Delata Hotel. Never heard of those.
Well, this is an Irish hotel group, that it will pay its first dividend in September, which is always good.
Yep.
It's expanding strongly from a commanding position in the hotel business in Ireland to the northwest of England. It's cheap. It's on a PE of 15. Again, our price appreciation potential shows an excellent number over a window of 3 years into the future. Management say that paying their first dividend will not affect their growth plans. It's cheap, it's on a PE of 15, and I think that would be a good example of what many people refer to as GARP, growth at a reasonable price. So I think there's a great future ahead of Delata Hotel.
Understood. And let's wrap up with Cranswick.
Well, Cranswick is one of my favourite shares. It's a unique company in that it's our biggest exporter to China, I believe. They send lots and lots, hundreds of tons of pork to China every year. Again, on a window of 2 or 3 years into the future, it's got an outstanding price appreciation potential. It's got a history of making money. Its relative safety is exceptionally good. Recently, it pushed up the page with the index. It's gone sideways with the index. And I think that if it breaks up again, we'll see a significant move in Cranswick. I have a long-term target, technical target based on a 5-year chart of £42 on Cranswick. It's not going to get there that quick, but nevertheless, I believe there's a strong move up coming in Cranswick, and they make the best sausages in the world.
Boom, boom. Okay, important numbers. Have you got any seminars?
Well, yes, we have lots and lots of webcasts. If anybody who's interested goes to VectorVest.co.uk and they'll see all our stuff there. Okay.
David, enjoy your August. Thank you.
Thank you, Mus.